Welcome to the Business News segment on India Roundup. My name is Paloma Quadras. India recorded the highest ever foreign direct investment for the first 5 months of a financial year during April to August this year. With mounting uncertainties due to the coronavirus pandemic and a fragile global economy, India received a significant amount of foreign investment of $35.73 billion, according to the Ministry of Commerce and Industry, being 30% higher than in the same period last fiscal year. A forensic report submitted by Grant Thornton finds fake accounts fraud borrowers used to divert funds in DHFL. The report in the DHFL scam has brought to light hundreds of fictitious loan accounts, deposits routed through an imaginary entity in Bandra, and a demand for recoveries totaling 14,046 crore rupees. The report comes at a time when DHFL's proprietors Kapil Wadhawan and his brother Dheeraj Wadhawan are out on bail after being arrested by investigating agencies in January this year. DHFL, which already owes 83,873 crore rupees to banks, mutual funds and investors, became the first non-banking finance company to be referred to the bankruptcy court for resolution by the Reserve Bank of India in November 2019. Canada's Brookfield is investing in $2 billion for India's biggest property deal. Brookfield Asset Management will buy commercial properties from RMZ Corporation for $2 billion, the biggest real estate deal in the Southern Asian nation. The Canadian asset manager is acquiring 12.5 million square feet of rent-yielding offices and co-working spaces for RMZ Corporation, the privately held developer said in a statement this week. The Indian firm said it will use the money to expand its portfolio and will have zero debt after the transaction. Large foreign investors have been buying into the Indian office market in recent years. Since 2011, the segment has garnered $15.4 billion of equity investments, according to property research firm Knight Frank. Narendra Modi to meet 15 global funds as India seeks investment to lift economy. The Prime Minister will meet 15 of the world's largest funds to promote investments in sectors like infrastructure. The purpose of the meeting is to consider their views on what reforms are required to attract long-term capital into the country. Companies have slowed down on new projects and capital expenditure has seen a significant fall in view of the COVID-19 pandemic. Industry experts and fund managers welcome the development, seeing this meeting as an opportunity to fill the gap that has been created amid issues concerning China. India announces new opportunities for defense contractors and investors. India recently announced new initiatives aimed at foreign defense contractors and investment as a part of the Indian government's initiatives to revitalize the Indian economy by allowing direct purchases from foreign contractors. As long as the procured item contains a minimum of 50% domestic content that is manufactured by an Indian subsidiary. Direct purchases may also be made through the direct commercial or foreign military sales process. The Indian government will allow up to 74% foreign ownership in Indian defense companies seeking a new industrial license without governmental approval. The import of roughly 100 weapons, platforms, and defense articles was banned in August earlier this year, with the aim of promoting Indian defense industrial base. Karnataka, as the most preferred destination for investors, has attracted the highest FDI inflow amid COVID. Karnataka continues to be the most preferred destination for investors and has attracted the highest FDI inflow of 10,255 crore rupees in the country in the April to June quarter. Amid the COVID-19 pandemic, according to its Chief Minister B.S. Yeddiyurappa, Karnataka continues to be the powerhouse of research and innovation and 15 Karnataka startups won national startup awards in the wide-ranging sectors, from urban mobility to satellite technology, organic farming to augmented reality, he had said. Tax Department lowers investment bar for recognized PFs. Could prove risky, say experts. Recognized Provident Fund trusts are allowed by the Central Board of Direct Taxes to invest in lower-rated instruments from April 1st next year. The move could be riskier for Provident Fund subscribers, experts fear. In an October 22 notification, the board said AA will be substituted by A in 3 provisions of Sub-Rule 2 of Rule 67 of the Income Tax Rules 1962. And sources have said that the Department of Economic Affairs prescribed the change, and for the purpose of taxability, the CBDT has notified the lower rating for investment instruments. AA-rated securities are less risky than A-rated ones. This change would lead to investment of PF monies in securities that previously were not permitted. Investors double down on direct-to-consumer brands. Top investors like Sequoia Capital India, Berlinvest, and Elevation Capital are doubling down on their bets on direct-to-consumer brands. Direct-to-consumer brands are products that are first launched through e-commerce channels, leveraging social media and technology, and later, their distribution is built offline as they scale. Investor interest has increased in the space as direct-to-consumer brands in sectors like fashion, beauty, personal care, food and beverage, and electronics are expected to become a $100 billion business in India by 2025, according to a recent report by Aventus Capital. Elevation Capital, which was till recently known as Saif Partners, is in talks to back cosmetics brand Sugar with an investment of $10 to $15 million. Additionally, it is also finalizing a $14 million investment in Country Delight, a milk products brand. Thanks for joining us today. Do not forget to share and watch our other programs on India Roundup. So we meet again. Stay safe and take care.